So I'm gonna this is gonna be a little different EDU session. What's up, VM? Good to have you on. Gaboon, good to have you on. Uh so um this is gonna be a little different Sunday session. I'm gonna cover some information and then Clay, um let me think here. Trying to think because I have to be careful with what I'm letting out right now. Fuck it. Just you can hit the record button. It's fine. Okay. So let's start off with some things. All right. First things first things first. All right. So let's just talk about the economy just briefly. Okay, and be done with that. Um, you know, if you're and put yourself in a seat of a billionaire or a fund manager. You have credit spreads that are really, really tight. Not good. Okay. You have the lowest consumer confidence since 2022. Okay. You have um, you have GDP that's declining, right? So just that in a nutshell, right? And then you have earnings for the most part are hanging on to a knife's edge, right? Even if they beat, what happens? They sell. The beats aren't as big. How much is the AI thing going to really, really, really boost everything? I think it's priced in for the most part, we could say, based on where the economy is. And then now we're not even talking about the tariffs, right? I mean, the tariffs are a whole different story. All right, that's enough about the economy. It's not that great, right? It's not as good as people think. It's sure as hell ain't good enough to go to all-time high in the next, 4 months, in my opinion. Okay. How is the Fed gonna how is the Fed gonna start cutting rates? Yeah, they've started tapering. They've started tapering. Keyword started tapering QT, which is quantitative tightening. They started tapering it. So they're starting to quantitatively ease. But to actually get the rates to cut, the best way to do it is to stomp inflation, which we already know we have stagflation. Pretty much recession is here and for the most part. But then we have the stock market, right? And to really force the Fed's hand, the market has to come down to a reasonable valuation to force the Fed's hand, right? Okay, let's take a look at SPX. You guys have seen this a lot, actually. Let me just go like this. This is the weekly right here. Okay, don't worry about my little orange lines, but I want you to pay attention to just briefly the weekly 200. Okay, and let's just take a look back at history. Okay, every time it is, except for back in 2010. Let's just take it from 2010 to now. Okay, world's way different. So it's double bottomed back in 2016 and ripped face 2020, tapped it again, massive V. Okay, then sorry, that wasn't 2020, that was 2018. I think that was right during the trade wars, actually. Yeah, and then 2020, a drop below in a snapback, massive rally, and then again in 22 to 23, or yeah, 22, right? Shoots up, solid, pretty solid move. Comes back in, doesn't quite touch it, and it hasn't touched it since back here. So now we are really extended. We could say, okay, we're at 50. We're where's that? Where's the weekly doing? It's roughly, was it 500, 600, 700, 800, about 800 points away. Okay, and it's already started to decline. Okay, it's gonna magnet to it. The key thing for me is like from a bigger standpoint is like, okay, let's get rid of this trend line. Okay, I like this trend line here because you got a low here off COVID, a significant low. And the reason why I like this trend line here is because the lows were snapback reversions off of a dump under the weekly 200, which is rare. Okay. So I feel like, to me, I feel like personally, I like the symmetry. And you may be like, well, who the fuck cares about symmetry? Well, it's actually really important in the market. Compression, supports, they work really good off symmetry. We could say that, and I'll get into the real good stuff here in a little bit. Just give me a second. Say that could work too, right? This trend line here. So I have two targets, right? This one's a little more symmetrical, and to me, it lines up with where this weekly 200. If you actually look at the trajectory of the weekly 200, it's flat. It's not flattening. It's still in an uptrend, right? And right now, it's sitting at 47.35. But how are we going to get there? How is it going to catch? Well, let's just look at where the timeline rises. So by August, which is right around end of Q3, right? Or sorry, no, end of, what is it? Yeah, right around the Q3 time. Okay, so that would be right here at 49.60. You know, you stretch it out to September-ish, right? Where a lot of these large hedge funds are positioned short into. It's right around 5,000. So, you know, we're not going to just go like this straight down. We all know that. It doesn't work like that. But we could see a drop down, right, this week into that. There's a gap here. I'll talk about that gap in a minute. Then we could see a snapback rally, bear trap, and then another low, right? And then we could set the low into this zone this summer, chop around, and then start to climb back up and out into the end of the year or into the next year, right? That would make this EMA kind of just float up and catch that. Maybe we get a fake breakdown underneath the channel, and then it pops up underneath that 200 and then goes. So the reason why I'm even talking about this is because, you know, my friend, who we all know, you know, does top analyst, does buying and selling for the hedge fund. They did a poll the other day, and the poll was, where does everybody see the market today in valuation? How much downside do they see? The average answer was 10% more. Where does that put us at? 5,000 on the button, right? That fits that thesis. Plus, the symmetry of the channel is too much. This channel is going to be strong right here, really, really strong. So that's one thing that, you know. So in terms of long-term investing, we're not thinking about anything. I'd rather, and just because they say they're expecting another 10%, that doesn't mean it's going to happen. It doesn't at all. But, you know, if we do get down there, that's a crash, right? And then valuation wise, it would be normalized. It would be attractive to investors. The upside would be good. You know, this fund also, listen really carefully, they're cutting another 15% of their entire fund this week, early in the week, Monday or Tuesday. Okay. So they're reducing exposure to the market. This gentleman who owns the fund has 50 years of trading experience. He took a $500 million account to over 10 billion. His return expectations over the next 5 years is from 10 billion to, over the next 5 years, listen, from 10 billion to 20 billion. He's expecting to double on his fund. So the reason why I'm talking about this is because it's all going to wrap around, okay? So they're reducing exposure here, but they're launching a fund for 500 million this week, a new fund. Okay? We will know when, we'll get the timing, everything's going to be good. Okay? However, they do expect more downside. He is building more of a chest. He has Berkshire overvalued. Their whole team has it overvalued by 20%. And Burke is sitting on 30% cash. What does that tell you? If Berkshire, if they have us overvalued by, or they have them overvalued by 30%, what does that tell you? If Burke goes down, the whole financial sector is going to get drugged down because it's the number one holding in the XLF, right? So, so for those that just hopped on, you kind of missed a little bit. It's fine, not a big deal. There's a recording that will be in members only YouTube. You can catch yourself up on it. Definitely recommend you listening to every bit of this. So right now, I'm talking about my contacts a little bit and updating people on what's going on. So for long-term investing, how this gentleman is going to attack it is he's reducing 15% more exposure of his, $10 billion portfolio, so he'll have 30% cash. They think the market is still, let's call it 8 to 10% overvalued at this level. So the attraction will be really more at, 5,000. However, they're not betting on it going to 5,000. We will wait as a room. We will wait to long-term invest at 5,000 in that zone. The reason why is because we don't have billions of dollars to wait, right? We're not 70% invested from whatever year, right? That's not how we work it, right? So we'll play that game because I think it's going to get hit because it's going to force the Fed hands at that level to step in and reduce or and cut rates. And if you look at the last 50, no, not even fucking 50, it's 100 years. Ever since the Fed has started doing the quantitative easing through rate cuts and then the rate hikes, when inflation gets a little too low, you have these catastrophic events, blah, 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 the financial crisis, the COVID, you fucking name it. It's the same shit every fucking time. There's a great YouTube video that's 2-3 hours long, and it goes in depth on this Fed. I don't know if I can have it, but the gist of it is the Fed is on this fucking cycle and how they manage inflation, and it's based on the election year patterns and how each administration works with the Fed and how they force the Fed's hands to quantitatively ease to add more GDP to the markets, yada, yada, yada. You know what I mean? So it's basically on a fucking hamster wheel, right? So the point is we, for this hedge fund guy, he's seeing things. I just covered credit spreads are fucking tight. It's just not good. You have the lowest consumer confidence since 2022. GDP is declining. The economy is not in a great spot. So if you're a multi-billionaire and you're looking to invest, how are you going to capture? And how is this guy who's got 50 years experience in a $10 billion fund expecting to take his $10 billion fund today and in 5 years have it at 20 billion expected? How is he going to do that? So what he's going to do is he's cutting 15% of his exposure. Now he's going to have 30% cash. He's going to be 70% invested. I have a laundry list of every fucking stock they're not trimming. And I have the list of the stocks that they're going to be investing in this week in the new fund. The list, okay, it's very important. You listen. This list is going to be the list that we go long on as a family, right? In shares and leaps when or if we hit 5,100 to 5,000 zone and we get confirmation, right? So once we get confirmation, I don't want to entertain this. This guy is going to entertain this until we hit those zones, whether it's this month, next month, June, July, whatever it is, right? Let's wait. Let's be patient. If it sets up for us, my God, this is going to pay fucking great. Because you could think about if you have got 100 grand and you say, okay, we hit 5,000. Now I say, okay, this is the laundry list. This is your stocks, the basket you can buy. And these are the leap options that you're going to take a look at, right? End of the year 2026 kind of leaps, right? Ideally, I'd like to see us hit a bottom around, Q3, right before Q3, right around the Fed time. I want to see capitulation. I want to see some certain technical things set up. on the weekly trend line that we talked, the symmetry, the weekly 200, right around that area, and then us to start loading shares and building those positions of, if you got 100 grand, 70%, 65% invested in shares and leaps in that zone, then use the other 30% to short-term trade and build out more capital as we trade out of the hole. Okay, so because you could easily cover your whole investment of 70,000 by trading out of the hole with 30%, right? So I mean, you see these snaps on the daily. Look, the snaps are nasty. We catch these off this line, it's going to be a payday. Okay, I'm talking we're going to be buying 300-400 out of the money 2 weeks out kind of deal, right? 3 weeks out, right? And catch them going at the money or in the money fast, right? The IV on the call side will go fucking crazy, right? So there's that side of it. Okay, so I have the list of stuff he's not trimming, and I have the list that he's taking long in the long. It's called a long only fund, the new fund that he's launching for $500 million this week. Do we know if he's going to launch it on Tuesday, Wednesday, or Thursday? No, it's not confirmed. I'll get the signal. The blue horseshoe will be released. So now, with that said, now let's go into let me think. So now the last piece I want to talk about this is how this person is going to manage his fund. So he's got all this cash, blah, 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 right? So for every 2% the market goes down, and this is good, just education, right? Of like how like a 50-year-old or 50-year experienced guy who's one of the best in the world at managing money, it nibbles in, right? So as the market goes down, every 2%, he's going to deploy 1%. Market drops 2%, he adds 1%. And then if the market bottoms at, say, 57.31 at this little baby Jesus gap right here that not many people see, it's tiny, really tiny. Look at that sucker right there. That's the little gap. That sucker's going to probably catch people off guard. I don't know if a lot of people are seeing that. Then we have another gap down here, right here at 5,000 to 5,100. So if he's nibbling there, if this is the bottom, he's perfectly fine with it based on the numbers that he's already currently invested. He's fine, right? So now let's get into the sauce this week. The yo soy of all soys. All right, let's go to let me get some of this shit out of the way here. Let me go to a different chart. All right, my chart is really messy. Apologies for this. I got to clean this up, but it doesn't matter for right now. So let's go like this. Let me think here. Let me go over here, and I'm gonna take and open up a different template, just so it can be really crystal clear. No, I don't like that template. It's ugly. Open my layout. What? There we go. Okay. So let's take a look. All right. Let me just quickly do this quick. All right. I got to clean these up way too many. These are all ones that I've tested. There we go. Okay. Perfect. There we go. All right. Let me just quickly clean this up quick. Make this really clear. All right. We're going to go daily, and we're going to go to US 500. Okay, remove all my line The fuck? All right, it doesn't matter. All right, so let me see here. Okay, so we're gonna go take a look at the hourly. All right. Don't worry about this BST shit. All right, we'll go hourly, and we're gonna go back to 2023. Where are we at here? I think I could do 30-minute actually on that date. All right, yeah, we'll do 30-minute. 2023 in November. And this will all wrap into this week. This week, so I think um there's a like I haven't felt I mean, I haven't felt this confident. And I could be wrong. It's fine. Whatever. Nobody's perfect. But I could be wrong, but I really haven't felt this confident in actually being able to like pin down a fucking pattern in a long time. And not only just for a day. I think don't hold me to it, but I think I got the week fucking nailed. Actually, where is that? Here. Okay, here we go. October. I'm getting there. So November 2023. Yep, here we go. Okay. And that doesn't have. I don't remember the last time actually. I think I've just done like 2 times. I've nailed a whole week, like top to bottom. All right, so here we go. Here's November 30th. Why is November 30th, 2024 important? Okay, I'm going to nail down some stuff here. Vertical lines, lock the dress. Okay, so, oh shit, is my wine here? Yeah, my wine's here. Just give me 1 second. I gotta get my bottle of wine. Let's take 1 sec. Shit. It's like I got my own personal doorbell and my dog. Okay, so I'm gonna talk while I unscrew this top. So the deal with this date is these are monthly expirations, and there's a lot of money, a fucking ton of money that's expiring on specific strikes. I don't need to even get into it. It's not even important. But the point is, is there's patterns, and this is a really like highly reliable skill if you have it and can use it. It's called pattern recognition. I've talked about this for sometimes here and there, um, and it's actually my favorite of all the things that I like to do is pattern recognition. So hit, yeah, I'll pour you a glass. Hit. So the reason why pattern recognition is important is because you have certain data that comes out, certain algorithms play off data. You have certain expirations, OPEXs, dates, reactions on policy, etc. Yada yada yada. We all know that. The guy who runs that big fund, he built the fund off pattern recognition. So pattern recognition isn't just like Fugazi. So let's talk about this. So the market opened on this particular day. Where was futures? Futures opened right there on the London. And then the market opened right here. Okay. So I'll make that one green. or yellow. And then the 2 p.m. algo happened right there at green. Why is that important? Well, it's important because on this particular candle, that's when the caller rolls, right? Now, look what happened. Look what happened. The market pops up, comes down, double bottoms, right, off of this support level right there, okay, holds the low of this candle, and look what happened. 4,544. So 4,544 on the open of this candle. And then that day, it ran in 30 minutes, you guys. This is 30 minutes. It ran 125 points. This particular day, 10 grand turned into 800,000 on zeros. 8,000% on this day. Do you know how many people caught that? Not many. Not many. So now I'm going to go back to the day that we caught a 2,500% alert because I knew this was going to happen. Okay. Oh, come on. I don't know why it's not like resetting here. All right. There we go. Where's that? April 24. Okay. Now let's go September 30th. Okay. This is a fun day. It's crazy. So June, there's September. So yeah, average, and you can see it on my Twitter. I even called this move the Friday before it happened and posted about it, and nobody listened. It was kind of funny actually. But and then I think I posted. Yeah, we posted the returns on it. But yeah, it was fun. It was fucking awesome. We went wild. I think there was like only like 25 people in the room, 20 people. Kind of funny, but we were partying hard. All right, so we're in July. Let's go back. September, August 30th. Here, where's September? September 5th. Sorry, I'm hurrying up here. All right, September 30th. Here it is. Bingo. Gotcha. Okay, so let me think here. Actually, I have to. It doesn't matter. It's fine. No, you know what? I'm gonna do that. It's gonna March. Yeah, I had to switch it to the hourly, and then my charts always reset. So just give me a second. Go right back here. November 24. There's September 30th right there. Okay. I want the hourly up for a specific reason. Okay, so you guys know that you know about the Tingleberry, the reversion play, right? Here we go. This is that day. This is the day we were partying hard, real hard in this chat. So let's go back and do the same thing. Okay, we're going to go look at the London. The London open on this particular day. Where's it at? Right, Sunday, right there. There's the London. Okay, and then they rolled the collar here. Right there. Let me get that out of there. They rolled the collar right here on this candle. So this candle opened up right here, right? So on this particular candle, when they rolled the collar, it opened up at 57.37. Okay, and it moved really fast down to where? 5,700. Okay. Now the play really, it wasn't the move down at all. Okay. The play was sitting and waiting for the move to reclaim or to like hold, right? To see where they're going to hold it. Now, when they did this, we were ready for it. We watched the whole thing set up. And right in this area, right in this area, they started buying calls. Not just a couple calls. I'm talking like, like when we focus on calls, we look at the 5-minute chart and we focus on sizable volume. Okay. In this particular day, it was 10x what I look for on a day. 5 to 10x. Typically at this time of day, we all know, because you guys have been in the room long enough, or most of you have, how the effect of charm has on the market and what it does and how the dealers have to buy back and then hedge and get back to delta delta neutral, and how those things set up and how it forces a squeeze, right? Or flush, vice versa, based on where we're at in time and how options are forced based on buying of calls or selling of calls or buying of puts and selling of puts, right? We know that. It's very simple. And if you don't, you'll learn it. Okay. So now, as we got into here, we saw massive, massive call buying and puts getting closed. And when we were in the room, once this thing broke this top range, I just kept saying, I'll never forget. I said, guys, wait, keep holding. They're going to break it. The volume's fucking pouring in. And then they broke it. So they went up. It came down. The candle closed. Candle opened here, right? So then this candle opened and it shot up. It oscillated and then just blew through this thing and exploded. And those things went crazy. Now, within this strategy is this. Watch this. This is cool. I'm going to take this out, actually, and I'm going to take a trend line, and I'm going to go right here, and I'm going to go right at the 21 or the 13 EMA. I'm going to make that green so you guys can see it. And then I'm going to go right above the 21 or the 13, whatever you want to say, that zone. And I'm going to take another one, and I'm going to draw it to the top right there. You guys notice anything? What jumps out at you here? I'll make this one red and this one red too. Magenta, whatever. What do you guys notice about this? Like, do you guys notice anything that jumps out at you? Symmetry. 5,700 right here. Right here, 5733. Right here, 5738. Right here, 5765. The almost to the dollar, the equal amount of snap down, it fucking extended back up. That's pretty cool, right? Same fucking thing happened on that November 30th day. How does that happen? Right? And the same thing actually happens on these massive bottoms. When they get gapped down and they reverse it and it shoots up and you see these like crazy days, this is what happens. Okay. This is really important for you guys to understand. Why is it important? Because if we get calls in here, we're not selling here, and we sure as hell ain't selling there. We sell at least right here is the first sale. And what are you trying to do? Now, this is strategy, okay? This is how we're going to strategize on our exits. So how are we going to play this, okay? So I'll get into what I'm expecting on Monday, but just hear me out. Okay, I'm expecting on Monday a drift down and then a fucking nuke, right? So we'll just, I'll get more detailed on it, but just hear me out for this, because this is strategy for that day. Okay. Actually, shit. Why don't we just go over there? Let's just. Okay, let's go over to the market now. Okay, go to my chart. Let me get the hell out of here. Actually, you know what? This is an important trend line here. We'll set that up here. I got a couple things here because there's a lot of important confluence that's going on. I don't really need this, but that, let me see here. Yeah, this thing is not relevant. It could be. We'll leave it. So I'm going to take this. I'm going to hide it. All right. And then everything else is fine. Hide this one a little bit. All right. Okay. So on Monday, I'm going to talk about some stuff here. How are we going to play this? Okay. This is my RSI up here. This is the 1 hour. Okay. We talked about this big blue line here a lot. I'm going to zoom out and I'm going to show you what I'm talking about. Okay, this is the hidden trend line that not many people are paying attention to. I call it the tabletop hidden trend line. Okay, it's the July high, tap, tap, tap. Watch, so tap, rejection, rejection, reclaim, not really tested, right? Until here, right? This is a big spot. So we know that this is a key trend line. Why? Well, fuck, look, this is a 4 hour candle and they stopped them right on the trend line. These 4 hour candles are considering this as a big spot, and it's at an angle. So we know if we look at the hourly, even look at that. Look at the hourly, guys. That tells you that this is a big spot, right? Look at the hourly over here now. The trend line could be off by like a fucking micro, a dollar here or there. This is irrelevant. The point is it's a key zone. We'll call it a zone, right? This zone is huge, right? So now let's get into it. So Monday when we open, I should know what I'm going to see if this is really going to play out. So what I'm expecting or anticipating is this. And if this trade sets up, awesome. Oh my God, this is gonna be great. And if it doesn't, that's okay. It's gonna probably be a scalp towards the end of the day. I'm not gonna be interested in taking any trades at all, to be honest with you. This is gonna be a one-off day. I really don't give a shit. I just want to be literally hanging out. If you want to take a scalp, I'll call them on live, scalp something here or there for whatever, maybe 100, 200%. That'd be awesome. Great. But really, my main focus is just chilling all day until the last 2 to 3 hours of the market. My attention will be highly focused in that time. And it's all I really only care about this fucking trade and if it sets up. So because this is the type of trade, like I just showed you, it can return 2,500%. That's 1,000 to 25K, right? That's 10 grand into a quarter mil or more, as you saw in November, what the fuck, 30th, into is a 8,000% play. So 10 grand into almost 3/4 of a mil, right? Obviously, you're not going to hold full size like a dumb fuck the whole time. That's not. I'm going to get into the strategy here soon. So as we're in the hourly, I want to take your attention to this. We talk about the Tingleberry, the reversion trade, the overextension trade. Y'all know that. But also, look at this. I really want you to pay attention to this. This line right here, this yellow line, that's the signal line. And this blue is this RSI. Okay. What do you notice that happens all the time? Get too far away, it snaps back, right? Too far away, but we're not snapping back, right? Too far away, it snaps back, right? And it overshoots, right? We see that. Now let's look at the 4 hour. We're just talking RSI. Okay, actually, go this way. 4 hours right here. Look at how fucking far away we are from the signal line. On the 4 hour, you guys. And we're almost at the 30-point bounce line, meaning the price on the 1 hour typically bounces 30 points minimum from this spot. Have we bounced? Nope, we haven't. And we're at the 4 hour and it's drilling. Okay. So knowing this, look at the history of look at the distance there to there. and there. Now I'm going to take my line. I'm going to take this. I'm going to say, okay, when was the last time we were that far away? Nope. Yeah, there. Yep, there. There. One, there. And look at how fast that sucker snapped back, and it overshot every time. There. No. Yep, there. And it overshot hard. Right? There. Overshot. Right? So it does. This is about the right distance. But here's the key. So when we have Monday open, this signal line is going to already be closer to the RSI, and the RSI should float up, meaning it should oscillate like this up. The signal line should be kind of coming in like that, still distance away, right? So if the pattern sets up, or what would be crazy is if the pattern sets up how I think it will. Let me go back to the hourly. Okay. Actually, hold on. Let me go back to the 4 hour quick. And I want you to take a look at the EMAs. We talk about the extensions. This was something I really want to touch on too. The EMA is 100 points away from price. 100 on the 4 hour. Dude, I don't know when the last time I've ever seen it like that. Right? So what is happening? The rubber band is stretching, right? Everyone's short in the hole. Negative gamma's crazy, right? And here's the thing about this expiration, JP Morgan is fucking underwater big time. And they need to make billions on this day, or they're going to fucking report a bad earnings coming up. Weird, right? So now we have that map. This is crazy. This is a big deal. The most I've seen it is probably 70, but this is over 100. So let's go back to the hourly now. Really oversold. We can see that. It's clear as day on the RSI. So what I'm looking at here is this to happen. I want to see in the open, load it up. I want them to retest this line, this zone, and I want it to fail. 55.67 was a big spot Friday that we talked about that they held into close. If they go up and test that zone or pop it above it, and then it fails in the market, right? And then I want to see them drill it. Where? I want this over here. I want this equal low. Why do I want an equal low? Into the 2 p.m. algo or into the roll of the caller. When they roll the caller, I want it at 5,500. Why? Anybody know? Oh. All guesses are welcome. You can cop on voice too if you want. Okay, because it's a psychological level, number one, right? And we just saw on September 30th, they brought it down to where? 5,700. Not, I mean, 57, yeah, 5,700 on the button. 5,701, whatever. Still, the point is this. We get 5,500 and at the 2 p.m. algo, what is every fucking retailer going to think? I know Chase knows the answer. Double bottom, bear flag invalidated, right? Double bottom. That's the key. They drop it down to that 5,500 psych level, and this is what's going to happen actually into that level. So there's a bunch of psychology behind this whole thing that I'm baking into this. Okay, you'll see. So the reason why is this. So if this happens, this whole pattern plays out like it has been, right? They're going to do one of two patterns. Either A, they're going to pop it up and it's going to be fucked and they're not going to do the pattern. Then they're going to fucking slam it right back down and close it at low a day. And then we'll probably catch a nice move at the end of the day down, right? This is not going to be guessing. I'm not going to guess and be like, oh, guys, we're going to go long. That's not how we're playing this at all. No fucking way. Okay? What I'm going to do is this. I'll know based on how all these patterns I have in my brain. I want to see pop up. I want to see it drill down. And what's going to happen psychologically? All of retail is going to chase the break. They're all going to chase the break. It happens every time. They're like, literally, like it's just like crazy that people just consistently think this way. They're going to chase the break of what? This spot over here. They're going to chase it. And especially if speed happens into that sell, as we saw the aggressiveness, right? If we see speed happen, and here's the kicker, we have the EMAs up here on the hourly, and we get a 40-point move into that double bottom spot or 5,500 psych level, I will fucking guarantee you they fucking rip that son of a bitch into close. Not guaranteed, but seriously, it's not financial advice. But just saying, I bet you there's like a 98% probability that we see a fucking face-ripping rally into close to 5586 or 5600. 80 to 100-point move is what I want to see and what I think can happen in the last 2 hours when they roll the collar and trap everyone short, chasing the fucking hole. Right? Then what's going to happen? We're going to be watching data. I'm going to be watching fucking data. Okay? I'm not going to be like, oh, yeah, we're going to just get calls here at this time. No. We don't do that here. Okay, I know what I'm looking for. We know what we're looking for. We're going to be looking for it very clearly on the option chain, as well as in structure and specific reversions, all this shit. Yeah. Yep. Hey, Chase, who was telling us that we were going to have a fucking bloodbath into this day from OPEX? Mm-hmm. And here we are. Here we are. March OPEX, I was calling a week before for a bloodbath into it, and we're fucking dying into it, and it's great. So now let's say we get in, right? It holds, all the stuff is setting up. We see the buying of the call options at that specific ratio that we're looking for, and they're peppering the fucking shit out of the chain on the upside, right? We're getting in. Now let's say, now we're coming to strategy. Okay, now we're all in. What are you going to do as a trader when you position in? Okay, I'm going to alert the calls. Don't worry, I will. Okay, but I also got to get in too myself, right? I've got bills and shit to pay. So as well as everybody does, but I will alert. So please be on fucking live. Please. Okay, the last 3 hours, let's just chill on live and party. Okay, so when it happens, it's like I just showed you the statistical reversion off the hourly. Remember the set? Remember what I did? I showed you in September 30th when we caught the 2,500 percenter, how I knew the distance above it would shoot above the hourly, right? We measured that distance. We just went through that. Okay, very simple, really slick thing. And how that works. It's just simple physics, equal and opposite reaction, right? But the key is you got to have that sizable volume coming in on the option chain. So let's just say, for example, the EMAs are here, these two green lines, okay? And we get in calls here, right there, right? And everything sets up, and all of a sudden EMAs are up here at 70, okay? What are we going to do? And let's just say let's just say, yeah, the EMAs are there or whatever. Let's say they're right here. Let me get rid of these couple here. Right there, get rid of that one. Say they're like that. Actually, whatever. It doesn't matter. So let me do this. I'll make it really simple. All right, so the EMAs are like this, like coming down like that. And this EMA is coming down like that, right? And then I'm going to color it, make this one, what's this one? The 21, which will be green, right there, that's green. And this one will be blue. This is the EMA, and 13 EMA, and that one's blue. Okay, so we have our EMAs, okay, and they're coming down, and we're looking at, whoops, hang on. Just trying to clean this up for you guys, make it really, really simple. Okay, all right. So we get into calls right here, right? And what happens is these EMAs are, 50 to 70 points away. Maybe they're 30. Ideally, it's kind of like 30 to 40 is like a sweet spot. But let's just say for this example, they're right here. Okay. And we get into calls because that could happen. Like you could be that far away, and that's possible. Right. So all the data is lined up. We understand where we're at. We understand where, gamma's position. We understand the charm effect. We understand where the positioning is happening, and all this stuff's lining up. The data and the facts are lining up, and we're ready to position in. So then we get in. What do? We buy 1 to 2 strikes out of the money with 70% size. Okay. Then we take the other 30% of our size and we go out of the money 5 to 7 strikes. No more than 7. Please don't go more than 7. Okay. Why? Why is that? Because if we're at 5,500 and you get the 5520s for $500 a piece or $600 a piece, and you put 10, let's say you put $1,000 in, right? You buy, say you buy one, no, it'd be about 400. So let's just say you buy 2 calls for $400 a piece for $800 on the 5525s, right? So a couple strikes out of the money, and then you buy, the other $200, and you go, 6, 7, 8 strikes out of the money, right? And you buy 10 because they're dirt fucking cheap because they've been drilling, and IV on the call side is drilled out, and they're dirt cheap, and they're way out of the money. We know that. So now you're targeting. You should never buy calls that are further away than the 21 EMA and the hourly in this type of situation. It's going to be quite a ways away, hopefully, right? We want it, the further away, the better. So, maybe you buy, say, 10 calls, right? For math, you got 2 calls slightly out of the money, and then you got 10 calls way out of the money, right? Don't be stupid. Don't buy $100 out of the money with calls. It's just ridiculous. Like you trust me, because I know how the shit works and how it moves. So the key, because the thing is you put the $800 in and you only put in on the 2 strikes out of the money. Once we fucking rip, those deltas are going to scream, and the IV actually is not going to go down on the call side. The VIX is going to drop slightly, but the IV, because the velocity of the move is going to jack up on your calls, and they're going to pop once they go in the money, and they should go in the money. So let's say you get the 5530 calls down here at 5510, 5500, whatever, and they go 20, 25 in the money. You not only just took $800 and made a couple 100%, you literally, those things are going to be like $3,000 a piece minimum, right? So you just took 800 into 6K. Right? And you still got 10 calls so what you would want to do in this situation is you cut one of those calls, and what did you do? You took your nut out. What's your nut? If I put 1,000 in, I took 1,000 out. That's your nut, right? My initial investment. So you're protected. And then if those calls are worth $3,000 a piece because those deltas kicked in, right? Yeah, you can take it all off the table. It doesn't really matter. But this is how I'm going to trade it and how I trade this shit. I'll take the one off because you know what? I not only locked in $1,000, but I also made another 2 on top of it. So I'm $2,000 richer, even if everything goes to fucking shit and it goes back to 0, right? So now you got another $3,000 sitting there on the one call that's 25 in the money. And then you have 10. Here's key point. You have the 10. Yeah, it's Monday. It's at 2 p.m. I believe it's at 2 p.m. Yeah, right at 2. They roll it at 2. So now you have the 10 that are out of the money. And those are probably up 200%, 300%, roughly. Here's the key. You hold those, because once it kicks over this 21 and it holds, and there will be structure within the day at the specific level, most likely. Once it breaks it and it shoots and it overextends, then you take half or 3/4 size off because it'll be over 1,500%. Okay, so now and then you can cut on that big extension. The key is when we get the big, so it's gonna be like this, right? It's gonna shoot up. Oh, shit. Yeah, I'll just do it here. It's fine. It'll shoot. We get in. It'll like this. It'll shoot up, and then it will fucking blast. It'll hit the EMA, right? And then you scale immediately. Scale your money, and then it's gonna go like this. It could go like this, boom, and then rip, right? Or it's gonna do this, and then flag, and then pop, struggle, and then rip. That's what it would look like this, right? And so that's why it's really key to scale and take your money on the first zone, right? And then you leave your runners. And then if this happens and it blows through and does an equal reversion right here, and I'm going to change the color to orange, and it does an equal reversion above them, like it does, like I just showed you earlier in the thing, the reversion, those calls that you just sold, you bought for 400 a piece, you just sold for 2,500 or $3,000, you sold one of them of the two, right? Those are going to go to like $5,000 or $6,000 a piece. Okay. And then out of the monies that you trimmed, so you're going to be trimming half or 3/4 on the push into the second level of supply. And then you let the rest ride, right? And then you sell the impulse on the blow through the top of the supply. This move up, the big move up, boom, you get the fuck out, and you're just done. That's how you're going to maximize the trade without being an idiot, right? And that's how it's done. Does anybody have any questions on how to trade this? I'll be doing my absolute best to walk through this whole situation as it's happening. I try to all the time. I'll do my best. Okay. So, but this happened. All this. Yeah. Yeah. No, he's going to be in the room. He's going to help us trade. My son's going to be fine. He'll be fine. He might even be napping by that time, hopefully. So he'll be fine. Last week, he was fucking awesome. He had his moments, but he was pretty solid for the most part. I do have my son tomorrow and next week, so it is what it is. The other second piece is on Tuesday, I have a court hearing at fucking 8:45 in the morning. It's a virtual one, so I most likely will be watching the markets and trading while they're doing that, hopefully. So that shouldn't take too long. So that's Tuesday morning. But now let's talk about the whole week, right? Yeah. All right. So that's the Monday setup, right? That's what I'm leaning towards in terms of highest probability play. Okay. So anybody have any questions on this? So now we'll go to the rest of the week. All right. Now, let's say we hit the trade and it all plays out gravy. Yeah. Right? Those that made the money, okay, we are going to flip short. We're going to flip short at the close up here. Okay, because they're going to do this. Boom. They're going to drill it and make a new fucking low. Right? Why is that? Well, remember what I said they're going to do? Oh, everybody's going to short the hole. Oh, let me chase the hole. We're going to break down. Nope. Oh, you know what then they think? Oh, double bottom, Chase. Chase, we're double bottom. Market's going up. Up. Yeah, really? Open up flat? Fuck you. We're going down. Why are we going down? Because we got tariff day on Wednesday, right? We know this. Bear trap, bull trap, bear trap, 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 fuck off retail, right? We know this deal. This is deal. Okay, this is why we're not fucking around with swings and stuff right now. Okay, this is the type of week. If this fucking week plays out like I think it will, this is going to change everybody's life if you manage your positions properly. I don't want anybody holding for hope. I don't want that. Okay. I will say I will alert cuts. I will alert, gotta hold this level. I'll be on live. I'll be fucking jacked up, like hopped up on like a spider monkey on Mountain Dew, right? You know, the whole 9 yards. You guys know when we get fucking rocking and rolling and we're ripping, I will be calm, obviously, but we're gonna be fucking if it does it, it's gonna get wild in here. And my son's gonna be start laughing and he's gonna be like playing peekaboo with me and all this shit. And we're gonna be going crazy. It's gonna be great. Now we flip short. Then we're gonna flip short at the close out till either if people want more risk, Wednesday. People want less risk, Friday. Keep it near the money, not out of the money. Okay. Then we drill into Tuesday and Wednesday. Okay. The new low will set. I'm expecting this little baby Jesus gap to fill down here on SPX 371-ish. Where are you at? Do I even have a trend line down there? No, I don't. I do on SPX though, so it doesn't matter. I'll just put a little block there. It's fine. Put a line there. There. I'll make it white, and we'll do white and dotted. There. Okay. So, yeah. And so then the deal is this. Like, how do I know that we're going to go back and drill? Do you remember what I said? My boy is unloading 15% of their $10 billion fund in the first couple days. You know what I'm saying? Shit. So, but seriously though, hopefully we get the nice squeeze up into that 56 or 5580 to 5600 level. I would love that. If that sets up beautiful, you know, great. Then we'll flip short and then we'll drill, right? And then we're going to tap the gap, hopefully down here at 5371-ish, or it's going to hold 50. There's a couple levels I got. This one's a big level here at 5390. This is a September low. And then we have 5408 and change-ish. It's like there's a zone in there as well. There's some spots in here that can get tapped or bounce. It doesn't really matter, to be honest with you. We'll nail it anyways. But once I get the blue horseshoe signal on Wednesday or Tuesday or Thursday, whichever day it is, then we'll know. Like then we'll be like, okay, ready to go long, right? And when we do this, okay, hopefully it's like, oh man, I made so much money, holy shit. And then, oh man, I made so much money, holy shit. And now we're ready to flip long, short, and then get ready to go long again. Now here's the kicker. Check this out. Remember I talked about the 4-hour RSI, guys? This is what this fucker is going to look like. This is so good. I really hope this plays out because it just like, it fits too good in my head. All right, so it's going to go like this. Float, drill, rip hard, float, drill, and then it's going to create what? Bullish divergence, right? Into Wednesday, and then it's going to go fucking ripping and then shoot up into the upper zone up here. And then we're going to go fucking short again. It's going to UTAD most likely, just like this top over here, right? It's going to do the same shit. And it's going to redistribute, right? It's just simple math in how things work in the market. And it fits with psychology. It fits with the timing of the dates. It just fucking fits perfectly. You know, it's going to fit with with a lot of stuff. So Um, anyways, that's the deal. So and then if we get the signal, right, on Wednesday, they could do two things. Okay. One, they could hold us down into the close, you guys. So the first position we're going to open is going to be 2 DTE calls on a Wednesday, Friday calls, right? Out of the money, 2 DTE. Okay. And then the second position we'll open is Monday, or we'll go 2 weeks out, 2 to 3 weeks out of the money, like way out of money, like 300 points, 400 points out of the money on SPX. And then if the signal comes in that day on Wednesday, and then the news gets released that Trump is extending the tariffs on that day into close, then it's going to be like fucking load the damn boat zeros right now too. So we'll be positioned in, and then they're going to screen the market, and then there will be another multi-thousand% play on zeros, and then we're going to leave our runners, or sorry, our calls, because the move should be at least 200 points back up. Think about this. If we tap and fill that 3370 gap, and we revert back up, where would we go? We're going to go right up to probably 5,700. That's a 250 point move. That can happen in 2 days. 2 days, real easy. We know they gapped it 100 points overnight and then ripped it. So they took us from 5620 on 2 Fridays ago on the OPEX, and they had us in 3 days at 5780. That's like 85. So that's a 140 point move in 2 sessions. Right? So I don't really care, honestly, about like swinging, right? But if we're in profit and we have sizable money in profits and we catch these moves, it is probably a good idea to leave some runners, right? And hold on. All right, sorry. Hold on a second. All right. So it is important because, at the end of the day, NFP, great. Yeah, we know that, right? And that's good. But if it comes in hot, cold, really, the market could do whatever the fuck it is, because at the end of the day, if this plays out, everybody's going to be on vacation by Friday anyways. You know what I'm saying, TLM? You picking up what I'm putting down? I'm saying? Yeah, we're all going to be partying. We're all going to be hanging out on the beach, drinking a lot of booze and having fun and, doing whatever freaky shit you want to do. So, but seriously, and then when it comes around, right, to, okay, now what do we do the following week? Well, let's just take it Monday first, one step. Let's analyze the data. Let's analyze the setup. We have I just literally laid the pattern out, the whole pattern. I told you exactly the sauce. I gave you the setup, like how to manage the positions, every little detail, right? I could not explain it more simple. I don't think. I'm trying to give it as simply as possible. I want everybody to manage their risk properly and not be greedy and make life-changing money in here, okay? And it doesn't change, okay? But if you're on live that day and throughout the week, you will have an advantage because you're going to be listening to me walk you through the trades. Because I'm not looking to trade, all this shit. This week, all I care about is SPX. Yeah, we may take 1 or 2 trades, right? That's fine, okay? That's fine. But in the grand scheme of things, okay? In the grand scheme of things, okay? I don't see us squeezing extremely high after the pop. If they give us the pop, right? The pop, meaning like late week after the tariffs get extended, yada, yada, yada. I could see that. I definitely do, based on our statistical mean reversion, based on where the RSI is going to be on the 4 hour, and based on statistically how often the snapbacks happen and divergences and how it's going to set up and build. We just went over that. But think about this. If earnings disappoint by a fucking fraction on any ticker, that ticker will get fucking taken to the woodshed and thrashed out to the fucking to death. And the entire AI froth, whatever you want to call it, will be drained. Their balls will be drained to the valuations of actual norms, like reality. Hence why we're in the Palantir puts that Bags alerted, right? I alerted him, but Bags alerted. He gets the credit because he shouted out the flow. I like the setup, so it doesn't matter. It's his alert. It's good. So, but anyways, that's a real thing. Look what happened to Lulu. Okay, Lulu got corked. Everything. So think about it. If let's put all the pieces together. Okay. The top performing hedge fund is about to cut another 15% off their fund. Okay, the top performing hedge fund hasn't even taken money hedges off. Okay, the top performing hedge fund is going to launch a fund on a specific day. Okay, all right, A plus B plus D. Okay, this is highly likely. You guys see the picture and see how the puzzle can fit very, very, very succinctly. So with that said, only focusing on SPX, SPY, right? You want to play QQQ, that's fine too. When we get around to earnings seasons, JP Morgan and Goldman Sachs have blackouts, so they better beat, right? Likelihood that they beat, slim to none, but we know that the caller is underwater and they're losing their ass big time because they underinvested on the put side of the caller for Monday. So they better fucking squeeze it hard and they better make a lot of money on it. Otherwise, their earnings are going to disappoint. We already know that Berkshire is overvalued by the top fund by over 20%. So if that's the case, and Berkshire isn't a classic distribution UTAD, and that distributes, why would we fucking buy the dip and hold for an all-time high like these stupid fucking idiots are calling on Twitter? Sorry, I shouldn't have said that, but seriously. You got to be intelligent. I've literally laid out the geopolitical scenario, how the stage has changed. It's not the Fed setting the tone anymore. They don't drive the market. It's the geopolitics that are saying this. Okay, so the best thing we can do is protect our money, pick off great legs of the trade, legs schematically, right? Leg of a trade, and then flip when we need to, and when we find our spot on SPX, what we just talked about long term, we're going to have a treasure vault full of fucking cash when it hits our targets. And then we're going to position for a 5x return. Or sorry, not 5x. A double on those low risk swings. And then we're going to have long-term leaps as well. Everybody got this? This is probably the most important EDU that I'll ever do, actually, to date, so far. Anybody have any questions? Please ask. Anybody want to say anything? Anyone? Sorry for server. If you want to be unserver muted, just let me know. I have a couple people server muted because you guys unmute and say shit. So say anything you want. And honestly, this is an open mic all the time. Just unmute. So, and like I said, the last thing I'm going to say is, look, this is my thesis based on a lot of all the statistical data and patterns and pattern recognition that I've been doing, right? Does it mean it's gonna happen? No. Does it mean it's likely? Yeah, it does. Okay. So this is it. Anybody have any other questions? Otherwise, I'm gonna cut the stream early today and let you guys think about that. I do recommend um uh just being on voice if you can during those sessions. Tuesday probably gonna not really be a big deal unless actually no, Tuesday is a kind of a big deal because they're probably gonna flush it right back down. So, puts at the open on zeros is probably gonna be probably, not most, I'm not saying guaranteed, probably gonna be a good play as well as our swings, right? So, you know, no calls tomorrow. Tomorrow's gonna be off. I'm gonna decompress and hang out with my boy tomorrow, and get ready for this week because this is gonna be a big week for me. Like mentally, I got fucking court hearing virtually, and then I'm trying to set this whole week up for everybody and make sure that we're all like really 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 on point. So yeah, I need tomorrow to like shut my fucking brain off. It's a little too active sometimes if you can't tell. Yeah, thank you, man. Appreciate it. Yeah. So, um, if nobody has any questions, we went over strategy. Anybody want me to answer any questions in terms of EDU? Um, yeah, no problem. What one more? Okay, so you want me to talk about that for a second? No problem. All right, so I just go to the weekly here. Oops, let me go to this channel. Weekly, weekly, weekly. Okay, so if you go to the weekly PB, thank you, brother. Appreciate it. So yeah, I like a little Pinot here and there. It tastes so good. Just once it hits your lips, you know what I'm saying? So uh you take the low from COVID, that wick, and tie it to the wick from October 2022, that low, and that's the primary low. And then you take the top wicks from the November 2021 into January 2022 highs, and you tie it in, and then you take it. I missed that. Actually, I think I might have. It needs to be just a touch higher. Yeah, then you take it right across the top shelf here, right? So then you can see it's a very symmetrical. Let me get rid of this line. It's a very symmetrical channel, and it's a powerful one too because we've had one tap. We've had, oh, sorry, one, two taps. This one didn't even tap it. It held, which is great. But what's nice is that this weekly 200 EMA is rising right along the channel. I mean, and it won't go in the channel as long as we don't keep ripping higher because this thing will start to bend. It will start to flatten here, and then it will start to bend down like this. So we could see this thing fucking wick down, trap it, and then go. You can just go. Okay, it's not even that long. It's like an hour and a half. Just go through the. Big Cat's gonna post it. Hopefully, Big Cat, can you post this later tonight? Well, yeah, you have time. I mean, we got a couple days. Thank you, brother. Um, so that'll be in the members channel, YouTube channel. Let me think here. Does that anybody have any questions? If you want me to do EDU, I'm happy to do it right now. If you have any questions on tickers, I do like the MSTR short still. Those are looking good. Let's go over a couple positions. Let's take a look at Burke. So if they have this 20% overvalued, and they have the S&P overvalued, yeah, no problem, Gaboon, man. Hey, by the way, great job. Like really, really, really great job, by the way, holding your 5750 put. Those printed heavy. Woo! So on when did we call top on those on our put swings? Fuck. When was this? Let me go back. Daily. It was right here. So so it was here. We got the put swings right here. 5771. And Gaboon got in. I think a couple other people did too, but we bought the 5750 puts for Friday at 5770. They cost I didn't see what your cost average was. Mine was $2,000 per contract. It was 20 bucks. They were pricey, but the reason why I alerted those is because I knew that if we did not close over 5700, we'd get fucking rinsed and those things would go crazy. He hit 575% on that. So he took 2,000 bucks into almost 17 grand. Don't DM him and bug him, but congratulations, man. Oh, is he off? Yeah, he's off. That's funny. But seriously though, he had a great trade. That's awesome. And let's talk about that for a second. Look at the daily, guys. Everybody's calling for bear flag invalidation right here. Look, bear flag. Look at this though. What is this setup? We talk about this all the time. Nope, not a spinning top. Evening star. Evening star reversal pattern. An evening star reversal pattern is a bullish engulfing candle, a big green dildo, right? Big green candle, followed by a doji. A doji is an indecisive candle. It's when the buyers and sellers are fighting and price closes at the same price it opened. Then this day was big because they closed it down it's called a bearish engulfing candle. It has really nice symmetry, right? This is a signal because this is technically an uptrend. And then you have indecision here. Okay. And then it confirms the reversal by closing below here, right? So you have this setup, continuation of downtrend. This is basic pattern recognition. Basic. Okay. So there's no reason. That's why right here, I only said scale 20 or 30% of our SPY puts for the 17th, right? And then here we scaled another, 45 or 50% or whatever here. So we still have a little bit more cheese on the table. And those will probably get closed out here on Monday, most likely. But that's beautiful, right? So anyways, the last thing I want to talk about actually is this. You guys remember how we talk about H patterns and how H patterns behave? Anybody remember? I know Clay knows. So this is an H pattern. Price comes down, does this. That's an H. Good job. Yeah, it does this all the time. It goes down, makes an H. And what does it do? Boom, snaps back, stops out, people chasing the shorts, and then what? Boom, dies. What is this, guys? Snap back, and then dump. Kind of looks similar to what we're looking at, right? It's funny how shit kind of lines up, right? Now, the last thing I'm going to leave you guys with is how many people in the world are thinking about what we're talking about today? In the world, how many people are thinking about this? How many people are putting these little things together based on facts, not based on guessing? Exactly. That's what I love about this week. I love it. Okay. Exactly. This is really, really important. That's important for like how you guys think. Do not think about shit like everybody else. You have to expand And that's why I talk like so openly about everything, because you should like listen, you know, and when you listen, it's like, man, then you start thinking like that, and then you start benefiting like that, and then you start telling your kids about it, and then they start making this, and then, you know, it's like, yeah, that's what it's about, right? So I have no problem doing that. I'm happy to do it because, you know, it's what life's about, sharing, right? So, anyways, you guys have a great day. You know, I know VM's gonna drink a little vino. I know Providence is gonna drink a little vino. Big Cat's gonna have some vino. Clay, I know everybody will.
Let's
So have a
go.
good night. Enjoy your weekend.